Welcome to the Cashflow Academy podcast. I'm Andy Tanner, your host. This is where we make investing simple. Stoked about today's show. We've got so much to talk about with the market just smacking its head on those all-time highs. And really the topic is going to be how far can this thing really go? So it's going to be fun. I'm joined by my great friends Noah Davidson.
Hello, excited to be here.
And Corey Halliday.
Nice to be here.
And we'll just take a moment. Corey, introduce yourself.
Yeah, so my background is in the financial markets. I got started over 20 years ago now and started kind of the traditional route of getting licenses. Here in the U.S., it's a Series 7 license is your basic license. And then I worked my way up the ladder, eventually became a Series 4 option principal, which is the head of option trading. And I like to refer to it as a risk manager. We manage risk. So,
very succinct. Noah.
I've been a lifelong student of the market. Well, I don't know about lifelong, but I started back on a dial-up modem back in the day. And I've just been studying the markets and trading and talking about it ever since. So it's been a fun process for me. I've helped a lot of other people learn how to trade over the years. I've had tens of thousands of people go through my classroom, and I just enjoy this stuff. It's a random thing to obsess about.
Fun stuff. And I like that when you say you're a student. That's always how I feel. I'm learning so much every year. I think if anyone ever got to the point where they thought they had a handle on it, they'd be in trouble.
Yeah.
So having 2-3 decades of hard work and learning, it's never a bad thing. Go to yourinvestingclass.com and there's goodies there and free training. Spend some time with us, spend a day with us, and check that out at yourinvestingclass.com. Always great stuff there. So with that introduction, so we walk in here today, and the market, to me, I shake my head at it. I'm an optimist. I believe in the long-term growth of the market. I think long-term it's great, but the sustainability of this particular run, to me, has I'm beside myself. So we're going to speak a little bit about what is behind this. Is it really as good as it looks? I don't think it is. So we'll start with technical analyst Noah. Tell us where we are technically in terms of where are we at?
Technically, they have this, it's a technical phrase, concept. It's called stupid high. This market is stupid high. There's a lot of optimism and enthusiasm, and the market has this ability to just defy gravity, defy kind of logic, rational valuations. It's emotion. It's people are excited that you got this big AI fuel, it's like rocket fuel, and it's being driven by just a handful of stocks.
Was it Schiller at Yale who coined the term irrational exuberance?
I don't know. I've heard that before. First time I heard that was from Greenspan. Yep.
And so Schiller wrote the book quoting Greenspan.
Yeah. And Greenspan, interestingly enough, said that, I want to say it was 1996. He called it irrational exuberance. And we know that the NASDAQ went up about 300% or so from there.
Yeah.
So if it was irrationally exuberant, he didn't really nail that one. He gets credit as though he kind of called the top. No, he was way off because the NASDAQ went up dramatically. Having said that, that kind of speaks to when you're going up, it's hard to predict. It's impossible to predict where the top is going to be, right? But we are reaching those levels where you're starting to at least see some divergences. You're starting to see that most of the sectors are down. It's just that the most important sectors from an index perspective are up. Because if you can go to finviz.com. Here's a little homework assignment. Go to finviz.com and click on the maps button. And you'll see a heat map.
Yeah.
You'll see a heat map of the S&P, and then look at the size of the squares of Apple and Nvidia and Amazon, and you'll see that's their market cap as a representation of the S&P 500. You'll see that Apple's square is larger than the utility sector. It's larger than the energy sector. It's larger than the real estate sector. It's larger than all of those, meaning
it's larger than the GDP of Canada, I believe.
Yeah.
Something, it's quite close, but they're big. They're bigger than a lot of countries.
So Apple could go up, the entire energy sector could go down, and the market's still up on the day based on those two factors. So in other words, we don't have a lot of market breadth. We don't have a widespread rally going on, but we have a rally of the biggest AI companies, which happen to be the biggest market cap weighted stocks in the index.
It's interesting. The term is the Dow Jones Industrial Average.
Yeah.
And averages are skewed. I prefer the mean when I'm looking at this type of stuff. If you look at 401ks, for example, the guy 65 or the guy 55 to 64, the average is like 180 grand in there. The mean is $70,000.
Yeah, way different.
So it's way different. And I feel the same way about this. Is you have a few rich guys in a room, it can really pull the average higher.
Yeah.
But the mean, it'd be interesting to see what the Dow Jones Industrial Average or the Dow Jones Industrial mean is instead of the average. Right?
There's an equal weighted S&P 500. I think it's symbol RSP. So you can pull up a chart of SPY that'll represent the S&P 500, but it's weighted towards Apple and Nvidia. If you look at RSP, it's flat. It's sideways because right now 51% of stocks as of yesterday were below their 50-period moving average. So there's actually more stocks in a downtrend than in an uptrend.
That's not a 20, that's a 50.
Yeah.
I mean, that's a couple months.
Yeah.
That's a big deal.
But that can skew those averages, but it can work in your favor as well. I'm a billionaire when I'm averaged with Warren Buffett. Between the two of us, we average out to we're multi-billionaires. That's the so it can work for you, I guess.
Yeah, but I'm below the poverty line if you average me with enough people in downtown. Or
That's
whatever,
right. So it depends on who you're averaged with.
You go downtown and you look around and it's like, man, I might be average.
Yeah.
So is this why they say you are the average of your 5 closest friends?
Yeah.
Oh man, I'm in trouble.
That's why we laugh at each other's jokes.
Exactly. That's why our sense of your humor is as bad as the 5 people you hang out with the most.
Yeah, exactly.
Oh, that's rough. So I'm a cash flow guy mostly, and I don't worry too much about it because wherever the market is, as long as the options market's open and as long as someone pays some kind of a dividend, I'm going to maintain, the cash flow. And I can live with what Warren Buffett calls the vicissitudes of the market. I can live with that. But at the same time, Warren Buffett, let's talk about this all-time high stuff, and let's talk about Warren Buffett for a minute. He says, close the doors. He says, I will tell you how to become rich. Close the doors. Be greedy when people are fearful. Be fearful when people are greedy. I don't know where the VIX is right now. I haven't looked at it today.
It's down.
I
don't know what it is, but it's
12
down.
or something.
Should we look it up? I'll look it up
it's
while
low.
you guys are talking. But the VIX has got to be low as it's been pre-COVID, right?
Yeah.
Let's just see if I can get it here on my phone.
Well, I'll tell you a little Warren Buffett nugget that's kind of funny. So this is kind of the Nvidia rally. That's the one company that's getting the most headlines, right? And their CEO, you know how rock stars will get signatures? The women will ask for their signature on their chest or whatever. So this woman asks Jensen Huang, the CEO of Nvidia, and he signs her chest. Well, Warren Buffett did that one time. It was back in
really?
It was back in 1998, and he did it. And from there, Berkshire Hathaway lost 30 some odd % of its value, and that was the big divergence where Berkshire went down and tech went straight up. And everyone said Warren Buffett's lost it and so on. But I thought that was a funny anecdote that Warren Buffett's done it one time as a rock star, and his stock tanked. But it speaks to kind of the bubbly, if you're a rock star CEO.
A lot of them crash and burn,
Yeah.
Well,
so maybe that doesn't suggest that Nvidia's in a very good spot that their CEO did that one time.
Yeah,
maybe they're due for a 30%.
That's a tell. Yeah, you start signing people, signing human beings.
Yeah.
So I just looked it up. It's at 12.
Yeah.
That's low.
Very low.
So that if the fear gauge is low, it's time to go. I think, and people like, subscribe, ask about this. I'm thinking about we should do like a 4-day event where the three of us get together and we talk about, like, okay, guy has $1 million or more. How do you protect that in a crash? Guy doesn't have $1 million or more. How do you protect something small? What if you don't have any money and you want to have a transfer of wealth? Because there's so much money that moves when these things pull back and come apart. I mean, the opportunistic greed glands that I still have, at a minimum, what's cool is if you can go delta neutral and hedge, like you'll do beta weighting, Noah, and you'll use, like, maybe you short a certain amount of future contracts, figure out what your net delta is, beta weight it. Okay, great. The market tanks. You don't have to liquidate your stocks and take a tax hit. You don't have to buy back any of the calls you have or anything like that because you're liquidating stock. You can keep all that premium. And yet those futures explode in value. All that futures is new cash to reinvest at the new lows. That's very difficult not to think about.
Yep.
It's very difficult not to see a line in the sand at some moving average or Fibonacci level or what have you and say, if it hits this barrier, whatever that line in the sand is for you, I want to hedge and I want to use some leverage instruments to protect myself, go delta neutral, but you'll be flush with cash to reinvest at the bottom. I mean, is that just too opportunistic for your style, or is that I'm going to hit both
I mean,
of
you don't. The thing is you don't have to be the one who predicts it. You just have to be quick to react. And the other thing when it comes to, because predicting a top, like Corey said a minute ago, is really hard. Impossible. And when people do it, they make movies about them.
Yeah. Well, but that could be the movie about the guy who got lucky.
Right. Exactly.
Like I look at The Big Short. Michael. By the way, that dude went short about. Didn't he go like
He's gone
about
short
8
a few
months
times,
ago?
yeah.
Like 8 months ago, didn't he load
Massive
up on puts?
amount.
Like $1.5 billion or something like that.
Yeah,
like it was over $1 billion in puts. Talk about getting your face kicked in.
Yeah, we joked about it at the time that we were gonna do some movie watching or something. If he got it right, but we were a little skeptical about the size and everything. But it's interesting because Michael Burry in that original Big Short, the whole movie, this premise is that he was really wrong initially, right? Yeah. The trade kept going against him. And he was like, how can they be priced like this? That doesn't make any sense. And the investors wanted him to be kicked out of, to close the position and so on. But he had legal authority to keep them in, and it ended up making them a lot of money. But it kind of speaks to, he didn't even predict the top very well in terms of timing.
They could have made
but he had, to your point, he had the ability, the knowledge. And that's one thing that COVID taught us is, in that time of crisis, how many people did we have show up for our webinar? It was overwhelming.
Broke the system.
But
I remember that.
They were scrambling to figure it out in the moment, and that's too late.
That's putting your seatbelt on in the middle of the middle of the wreck.
While calling your insurance agent to up your policy,
You're like, you got your cell phone here with the insurance trying to up it, and you got your seatbelt about right here going in.
It's too late.
Bang. Yeah. Too late. But even with Burry, though, I mean, they might have made a movie about a guy. Let's say the crash happens 6 months after. He doesn't get the movie. The next guy did, or the before. Hindsight's 2020. It's like Cuban, and I think Cuban was brilliant with his put play on Yahoo. I think it was brilliant. But it's almost like, oh, gee, your house burned down. Did you have insurance? Yes. Well, how could you have predicted that? You're a genius.
Yeah.
It's called arson.
Yeah, it's a little.
That's how you predict it.
Speaking of insurance,
anyway,
fraud.
Noah's mind goes. Immediately Noah's mind goes.
There's some dark places in that mind, Noah.
It's true.
I mean, it's like I make an analogy. Insurance, arson.
That is one way to predict it, though. I get it.
Well, so speaking of stuff burning down, I think we should do. So like, subscribe, comment. I don't know how to ring the bell. I don't know how all that stuff works, but if you guys would be interested, like Corey, it was interesting. You sent us a text on our three guy group text where you were seeing a pattern sort of develop. Well, it's got another one developing. But your comment on the concentration, it's kind of like when the FANG trade rules everything, right? The concentration of that, it's got me thinking, because where the Fed is, you look at a guy like Robert Kiyosaki, and he's always, it's going to crash, it's going to crash, it's going to crash. Well, it is eventually. But I know this. Today's one day closer to whenever that day is. And Buffett said it. And that's what's crazy, is he's an optimist, right? Okay, look at the cash he's packing. And what did he say? He said, well, I don't know if it's going to happen. I mean, he's now predicting a major.
Yeah, he basically said, we're going to have there will be major downturns. And I don't know if it's going to happen next week, next month, next year. But his point is that there's a certain behavioral type of pattern that happens. There's economic cycles. We just go through these cycles. There are recessions, there are downturns. In the stock market, it's the fact that you get a quote on all of your stocks and on your portfolio is both a blessing and a curse.
It's a curse.
It's a curse to most people,
yes,
because they get emotional about it. They get locked in. But it's a huge blessing in that if you're not the emotional person, if you have the proper temperament, there's nothing better than both participating and being able to take advantage of the downturn, which we could talk about in that class, but then also on the other side of that.
If you want this, tell us in the comments, because what I wanted to do when we were on that text, I thought, we should all, like the three of us, should get together and we should decide, what do we want to do now in this environment? What are your plans? What are your plans? What are my plans? And think tank that through, because the opportunity, I'm usually not this greedy. But having been through so many of these crashes,
yep.
Buffett calls it the shooting the fish in a barrel experience. It gets so, to your point, it is so easy. He says the word easy. Yeah. It is so easy to pick up bargains, but also I want to hedge this one.
Yeah.
I just, my greed, maybe I need to settle down.
Well, it makes a lot of sense when you start checking all the boxes, when you start looking at fundamentals and you look at technicals and you look at market sentiment and you start checking the boxes. We know that from experience, I thought for many years, I used to tell people that the biggest bubble I see is in those predicting a bubble, because I thought everyone's a pessimist. And when this many people are pessimists, you don't have bubbles when everybody expects a bubble. But now we're on the flip side of that. You've got so many people on the other side of that where it's like, oh, the market's great, and now when I talk to people, and this is anecdotal, but when I talk to people, 5-10 years ago, it was like, ooh, you're in the market, we're going to crash again, the economy, the Fed, the pessimism, right? And now it's an entirely different thing of, oh, you're in the market, well, I'm buying this, and I've been buying Nvidia, and there's a level of excitement. And that's anecdotal, but I think it speaks to the broader sentiment that, to your point, when everyone is greedy, you should take a little caution with that. You should be a little bit.
Main Street's not doing that well.
And it doesn't take long for it to turn. The market's always hitting new highs right before the major corrections.
Yeah,
so again,
always.
it's right now you got a lot of exuberance, but we are seeing some of those divergences like you mentioned before. And again, it's not a matter of if, it's a matter of when, and I don't have to predict it.
Just when it turns,
react.
Know how to do it.
When we come back, we're going to talk more detail about strategies. We're going to talk more detail about how you might hedge. But for now, let's take a commercial break, and we'll do an advertisement. We'll be right back.
Responsive to questions. They're very detailed in their training. You can start from no investing experience whatsoever and get educated and be able to make a nice retirement for yourself, or even a living. It's an amazing educational system, and I would highly recommend it. The one thing that will get you more confident in investing is your education, your competency, and if you can get to that point, you can do anything.
Welcome back to the Cashflow Academy podcast. We're here with Corey Halliday, Noah Davidson. We're speaking about this high market, a new, and right before we went to commercial break, Noah says, it's always at a high, and then, it's not, it doesn't do this. It's a high and it is a drop. When I look at this Main Street, talk to me about this. There's Wall Street and Main Street, and they're not always congruent. Right now, Wall Street looks like it's doing well based on averages. But Main Street, this is what I'm seeing. I've had friends that laid off half their staff, half. I've got friends that, they'll work in the retail or work in grocery or work in, like Costco's cutting hours, stuff like that. I've got family who, when's the last time you had a family member downsized? Well, I had a family member downsized last week, right, in the tech industry. So I'm just saying that those types of things, it feels very, very, to me, this feels very, very, on the stock market side of things, it feels very 1999-ish to me.
Yeah.
With the AI, with the, doesn't it feel 1999?
Yeah,
One party like it's
and sort of even 2007-ish, because
now that was the other
because
side.
2007, remember, it was I buy real estate and it's interest only loans and no docs and all of this thing. Well, a huge part of the consumer demand lately has been buy now, pay later. What could go wrong with that? But that's a huge, that's a huge thing. And Apple just announced yesterday they're canceling all buy now, pay later in the U.S. Who has a better read on the consumer than Apple? And Apple said, "Okay, we're done with that for now." Like, that speaks to they're a little concerned.
Like some of the chip makers and things out there that are super high, like Nvidia, they're like financing the sale of their own product.
Yeah.
So it's not real revenue; it's future.
It's an IOU.
It's an IOU revenue. IOU revenue.
This is the same thing to your point on real estate. Now it's not. Now real estate interest is too high. There's no. But when you make supply and demand has, I don't like the word demand. I'd almost like to say supply and ability.
Yeah.
Because if like who wants a Ferrari? Well, everyone that fits in one, right? But I don't.
You might be the only one that doesn't want a Ferrari.
Kenny McElroy bought this Ferrari and you know what he put on the license plate? C student.
Yeah.
So anyway, he goes, my kids were at his house, or we were doing something at his house. He goes, Andy, you got to sit in my Ferrari. I'm like, you're such a jerk.
Yeah.
Because he knows I can't even close the door. He knows it's a convertible. The windshield's hitting me in the teeth. I can't get in a Corvette. I can't get in any of that, but I can get in a Hummer. So anyway, but here's the deal. Now I forgot what I was talking about being too big for stuff.
Well, the buy now, pay later.
Buy now, pay later stuff. When you enable student loans, what happens to tuition?
Goes up.
And if you enable them and forgive them, what's going to happen to tuition? Because it creates demand.
Well, like, and how much of this being driven by Nvidia is due to the fact that the stock became suddenly more affordable.
Yeah.
People more able to buy. So
it's crazy. Yeah. So, okay, let's talk now. Let's keep our promise and talk a little bit about. I think we ought to have a meeting on this. I think we ought to do a special event ahead of this. Here's the funny thing. I don't know that this is why I'm going to invite people to comment and subscribe, see if they want us to hold it. Because here's what happened. In March of 2020, I remember this. I was at one of my kids' youth basketball games in kind of a little youth league, spring league. And I got my phone, so I'm watching my kid play, and I'm going to watch Oklahoma City play the Jazz. And I'm looking at my phone, the Jazz players are ready to tip off almost, and then they pull everyone off the floor. And just buzz, right? Within 24 hours, Rudy Gobert has COVID. 24 hours, they cancel the NCAA tournament. That's $1 billion they just lost by canceling that tournament. NBA is going into a bubble or whatever they're doing next year. I mean, those playoffs.
Disneyland shuts down, etc.
Yeah, the whole world goes to crap. Well, we had a webinar scheduled already. It was on the schedule for a couple of months. Our system broke. I mean, it just melted down with the amount of people saying, help, how do I, and down, and So my thought is why don't we do it before?
Yeah. So
let's start with what would we talk about.
By the time we schedule it, it might be right in the middle. Who knows?
Okay, here's your skill. Here's your toolbox. Okay, number one, you got to understand what a delta is. If you don't understand delta, you're screwed because you got to delta hedge this stuff. So I would say, from a broad perspective, Noah in the Mentor Club, you're always beta weighting. So being able to beta weight a large portfolio, let's say even a small one, because you could use you can use.
Well, I mean, you can create protection for your individual stocks all the way out to your whole portfolio. Okay. The question is, how much insurance do you need or do you want? And so we can measure, and you can measure it. And so it doesn't matter how big your portfolio is or what kind of assets you're holding.
But the key is reacting, like you said, quickly. Right. Reacting quickly, because I don't need, like, if you have a locked-in mentality for insurance and you're locked in, like, oh, here's my bundle of home, car, and auto. No, you can leg into insurance as this goes, right? Yeah. And it gets more expensive. It gets ugly. That's something. But I'm just saying, in the toolbox, you got to understand what delta is, and you got to be able to beta weight using a broad market beta weight thing. Second thing, you got to know what a protected put is. You want to talk, like when you were managing. Yeah. Okay, so you're sitting there, you're a Series 4 option principal at this Wall Street firm. You got a couple hundred traders on the floor, and you're looking at all their trades, and you got to make sure that the risk is not too big. What are you using? Are you beta weighting, or do you look at their individual positions? Is it protected put time? Is it spread? You use spreads? What are you doing?
Yeah, usually, I mean, it depends on what type of protection you're looking for. If you want immediate protection, you can go to those futures and you can take off that risk quickly by just hedging. Yeah. But if it was a single position that you were worried about, you would, to your point, buy protective puts on that position. You could even collar it, which is one of our favorite strategies, because then you pay for the puts. Neutral. You're not even spending the money.
A lot of people don't know that's what Mark Cuban did when Yahoo crashed.
Collar.
I'll tell you the story. Yeah. People might be interested in this story. So Cuban, this is a great story. This is worth telling because it speaks to the intelligence of how to do something in a crash. So Cuban, he's a bartender, and one thing leads to another, and he starts a company called Broadcast.com. And they're broadcasting baseball games and sporting events around the world via the internet. So your transistor radio isn't working. Now the internet gets you the game. Yahoo is buying everything in sight. It's before Google really became Google. Yahoo was the main search engine, and their stocks, let's just call it $100 a share, whatever it is. So they buy his company for $5.7 billion in stock. Here was what's interesting. I think it was 6 months. They said, you need to hold your stocks vesting. You got to have this 6 months before you can sell it. So here he's got this huge car with no insurance on it. Now, I don't know if he predicted this or was just smart about it, prudent about it. Because if you, like, I don't know if it's true. I heard Kareem Abdul-Jabbar had his house burned down and he had no insurance. I don't know if that's a true story, but it might be a rumor. But can you imagine having $5.7 billion of anything and not insuring it? You would insure anything worth $5.7 billion. Yeah. You just wouldn't leave it uninsured. But in any event, he said he took every dime he had, millions of dollars, all the money he had, he bought puts, and it didn't fall. So he lost every dime that he had trying to protect that 5.7 until he could get the right to sell it. Well, 6 months down the road, once he had the right to sell it, he sold calls. So let's say he sells a call that says, great, he wants to convert it anyway. He wants to sell it anyway. Yeah. So he says, let's say I sell a call at 101. I don't know what it was. Great, he's out. And he got paid to get out. But he took that money and he says, but I want the right to sell at 100. So he called it. And when it fell, in his words, those puts were worth a fortune. So
it's one of the single best ways to protect yourself in an individual position is a collar, because you can give yourself some upside still, but you limit that downside substantially. And so when we teach these protective positions, there's an understanding of delta, there's an understanding of theta, and some of these things that we'll teach in this class. But the idea, let's say that stock's at 100. If you sell the 105 call and you buy the 95 put, you're basically creating an area where nothing happens. Yeah. But in the event it goes higher, you get to sell it even higher than where you would have that day. And if it goes lower, you get to protect all that downside. Now, imagine that stock dumps and it goes to 75 from 100.
Keep your stock.
Well, you can keep the stock if you think that stock's a good value. And that's where I'm going to be at.
That's what I
when
want.
the market crashes, and it will eventually crash, and you need to know how to do this, but if that market crashes and I can monetize those puts for a lot of money, now I have all this influx of cash that I can re-spend.
That's where we all want to be. Agreed.
Yeah,
Look,
absolutely.
Delta neutral, and that's where the insurance analogy breaks down. Because in the insurance analogy, Geico's got to buy this piece of crap car and fix it. It's a liability.
Yeah.
We sell those puts. We keep our assets, and we get to reinvest at the lower prices with the insurance money. So you don't lose the asset. The asset is not fatally damaged. It's just cost less.
Yeah. It's an analogy where when you buy insurance on your house against burning down, you get the payment, but you have to rebuild the house. So you're just back where that's not the way with stock. If I own 100 shares at 100 and it goes to 75 and I had puts, I still have 100 shares. I still own my asset, but now I have all this cash that I can redeploy and buy more of that stock or another stock.
You know what it reminds me of?
Arson.
Arson too. Yeah. But no. We're in the same ballpark. That scene from Trading Places where Eddie Murphy's got the vase.
Yeah.
And he's like, this is my vase?
Yeah. That's a pretty good Eddie Murphy.
That's pretty good, yeah. So he drops the vase and he's like, oh, I'm sorry. I didn't mean to break your vase. He's like, no, that was your vase. And I think we insured that vase. We valued it at something like 30,000, and we insured it for 50
or 45.
Whatever. You just made $10,000. Congratulations.
Yeah. You want me to break something else?
No. But you can over-insure the portfolio. You can call it. You can buy extra protection to the downside.
Yep.
And it'd be like more like anything else. It'd be like taking out insurance on somebody else's property and then getting a payout, and you don't have to rebuild the house.
Yeah.
So you can do that too.
Experience tells me this is such an obvious. It is so overvalued. To me, it's just so obvious now. I mean, you've got, Nvidia's not overvalued, and Apple's probably not. I don't know. Those are incredible companies. But Main Street's just, our GDP, is that justifying that? Is that a stupid fundamental? Is that the dumb fundamentalist in me coming out when I say, look, the GDP is not growing at the rate the market's growing. The market is crushing. Am I stupid in saying that you got to come back to not what have you actually produced? Even with the money that it's with borrowed money, you're still producing stuff and buying stuff with borrowed money. What's your take on Main Street versus Wall Street, GDP versus levels of the market?
Yeah, I mean, that's where the long-term Shiller PE comes in, right? Because it goes through economic cycles.
Well, and it adjusts for inflation.
Yeah. And so it takes into account some of those things. And if you look at the Shiller PE, it's not a pretty picture right because we've been higher one other time. But when you say that, you're like, we're in the upper 95th percentile for valuation. That means we're stretched. This is, what did you call it? Stupid high?
Stupid high. It was just a technical term.
Hey man, okay, so this is interesting. So we're at 37 or 35.72 on the Shiller right now.
And we've been higher one other time.
And it was, and this is why it feels so 1999-ish, because it was 1999.
We were higher.
That it was higher. But here's what's crazy. It hit 40. Okay, it hit 40. 40 is the all-time high.
So
it's
you're
never been close
saying
to that.
We can get dumber.
I don't know if I can. I mean, so we have this thing about.
Well, you're the average of the five
right now. So I'm off at some basketball camp with my kid. He's something. I go, everybody knows that, and he loves to do a Trump imitation, where Trump is like, no one knows more about nuclear reactors than me, and nobody, no one knows more about the economy than me, and there's that like 15-minute YouTube clip of all the different things he says. Nobody knows more about
Whatever.
Nobody knows more about this than I do. Believe me. I'm the best at it. Nobody can compare.
That's pretty good.
That's not bad, no. So anyway, we've shifted a bit. That got kind of old and tired. So now we've shifted not to I know. It's like everybody knows that. Everybody knows that. But here's something that not everybody knows. 35 on this. So what's crazy about that is if you look at the mean, it's 16. So we're over twice as high as the mean over the past. This goes back to 1880 something, 1870.
Yeah. Oh, it's back in
and
there.
And it's supposed to take into account the economics and the inflation and those other factors.
And if you're
that speaks to your point about are we at a good value compared to the GDP, compared to what we're producing as an economy?
We're not, and we're paying $35 for a dollar.
Yeah.
That's really all that says. You're paying $35.
There's the jack in the box.
In the box right there. So if you're in a 401k right now and you're on autopilot, making a promise basically without getting paid a premium, making a promise to take some of that paycheck and buy stuff, you're getting the least for the most that you've ever gotten other than 1999. And it isn't interesting that 1999 is .com bust and this AI is fueling, it feels like 1999.
Yeah.
And AI is impressive. It does some amazing
cool,
things.
But
have you ever tried to give it instructions to do something basic?
It's not there for trading yet, though.
No.
I mean, unless you're like Jim Simon's group and the amount of terabytes they have. But the average guy, how often does ChatGPT like I was talking to it the other day, and I'll say, dude, isn't it this and this? Oh, yes, that's right. And there's disclaimer at the bottom. Verify, check.
Yeah.
ChatGPT makes mistakes. So it'll get there, but it's not there yet. Holy cow. Shiller's at 35.72 as of this podcast recording. 35.72. That's a lot of money to pay for a dollar.
A dollar of earnings.
Take you 35 years to break even at that rate.
Yeah.
That's quite a bit. So I was talking about the toolbox. You got your beta weighting.
I think
your delta hedging.
We could talk about the history of cycles so we can compare it to the past. They say that the past is prologue, meaning that these patterns repeat. We've seen this before. We don't know exactly how it's going to play out, but we do have patterns by which to compare it and to understand what's probable, what's possible, what are the tendencies, what are the general behavioral patterns. And you can look to not only past performance, but past decisions. Like, what did people do the last time the market crashed? Where did money go? Some of it, it doesn't disappear. It changes hands, it moves asset classes, and wealth is not created / destroyed. It's transferred. It's a transfer of wealth. And if we know what they did last time or what the smart money did last time, we can position ourselves to do that next go around.
Here's your difference, and we'll close on this. Here's your difference. You go back to 9/11, Greenspan drop rates, and Bush says go shopping. Remember that?
Yep.
Bush is worried about the economy, and he's like, sorry for all these victims. So by the way, best thing to do as we grieve is to shop. Remember that? Brutal. Then you got Bernanke,
Sorry. I'm like, well, that's when my shopping addiction started.
I saw no something snide to say out of the corner of my eye. The arsonist speaks. Yeah. Next time there's a fire, everyone's going to look at you now.
It's an inside
job. He was
job.
talking about arson on the...
I do have to give...
someone starts a fire in the force, like, let's check Davidson out. He had a fetish for arson.
He was a Boy Scout, so he knows how to start fires. Now all we need is method and motive.
So anyway, you're killing me, man. You're killing me. No, I forgot what we were talking about. That's twice in one
Well, you
podcast.
went towards Bernanke.
Oh, Bernanke, thank you. Twice in one podcast. I know. So Bernanke does the Bernanke put in, zero interest rate. Can't do that anymore. Those tools are not available to the Fed because COVID, they overdid it. Yeah. And now inflation is being brought to bear, and it's not transitory, and it's sticky now. Isn't that crazy? In a year, you go from it's transitory to it's sticky.
Yeah.
Two extremes. They don't have the tools to bail us out without having inflationary problems.
And there's one other big factor that some people are talking about, but not enough people know about, is the petrodollar deal has expired. And
Oh,
so
that's
our
a big
ability
deal.
to export
Yeah.
inflation, because the dollar has been backed by oil,
I'm telling you.
it's less so. So and I don't know what all the implications of that are. I mean, it was always set to end. There was a sunset on it originally, 50 years. But now that it's come to an end, that one thing, the petrodollar that helped the U.S. dollar stay strong, is no longer the case. And so now it's a question of, I think there's a question of what's going to be the world's reserve currency. And that's in play, that changing world order. So there's interesting things to talk about and to prepare for.
Interestingly enough, that whole dynamic is playing out a little bit in the golf world with Live Golf and the money from Saudi Arabia coming in to fund that. And I think
That's right.
I think there's an aspect of like entertainment.
All those PGA guys are going nuts over this.
Yeah. Oh yeah. There's infighting. I mean, it's basically PGA against Live, and the idea. So the U.S. has had a huge advantage from being the reserve currency of the world, but we also have a huge advantage in terms of being the entertainment capital of the world.
Yeah.
And so I can see why other countries are saying, let's try to get some of our money into these entertainment type of items and see if we can figure out how to either take advantage of it, profit from it, or how we can become an entertainment capital in our country.
When Sony and Mitsubishi were making all the VCRs, everyone's like, they're going to take over the world VCRs. I'm like, Hollywood makes the movies that go in the VCRs, right? And that's just kind of how it is. That's a big deal. So many changes, so many different, as the bubble expands, there's so many different pins in space out there. Bond market liquidity, huge debt. It's the everything bubble. There's so many different pins. You have a environmental concern. You have a political concern. It was funny. My son, he freaked me out a little bit. He gets stuff on his phone. He goes, Dad, there's Russian nuclear submarines in Cuba. I'm like,
have you ever vacationed in Havana? It's lovely this time of year.
But I'll tell you, like the Cuban Missile Crisis, who was it? It wasn't Gorbachev. Who was it?
Khrushchev.
Khrushchev and Kennedy is a little more evenly matched, I think, than Putin and Biden right now.
Well, who has the upper hand?
I mean, can you picture those guys?
Well,
look, if you just sat down, we're going to play poker.
Yeah.
Right. Yeah. I mean, I don't know who I'd put my money on.
Yeah,
right?
that's
nutty
unfortunate.
guy or nutty guy, but anyway.
I put my money on the other party, China, who's not even playing in the game.
I don't know. I mean, Biden's never, gone shirtless. You remember when Putin was doing all that shirtless crap?
Riding the horses.
Riding a horse? I thought it was a bear.
So anyway, Zach goes, there's this thing. I'm like, I didn't go to CNN or Fox, man. I went and checked the futures first.
Yeah.
And I go, okay, it must not be bad because the futures are fine, son. And turned out it was a planned exercise, right? But he had a little, thing on his phone that says Russian nuclear submarines in Cuba. It was a planned exercise. But anything like that can trigger this contagion. And I'm telling you, it's time to get prepared.
For sure.
Because this new market, I looked at it today. I was like, how are we having? You see the candle this morning?
Yeah.
Was it a Marubozu candle? I don't know if it's that big, but.
Well, yes, yeah.
A gap up. How often do you see a gap up on the futures?
Gap up
on the index
with a Marubozu.
Big old candlestick with momentum.
Yeah, it
and
was
volume
just a fun
behind
word
it.
to say,
Yes,
Marubozu.
I can't pronounce it, so I avoid it.
You're about. We have an arsonist and a golfer and a guy that likes to say Marubozu.
Yeah. I think that qualifies us as the Three Stooges pretty much.
Pretty bad. So.
But yeah, yesterday, that candle that you're talking about, so it's called an expanded range candle because the daily
I think it's called a rising window is the technical term, and it's also stupid high.
Yeah, exactly.
Stupid high.
But
is that right from Steve Nissen?
Well, rising window is one of the candle patterns. You get a gap up, and it's like a Marubozu. They call it an opening or a rising window, and it's a momentum play. And you expect some follow through out of it for a couple of weeks. Now the markets are closed temporarily. We got a holiday this week, but that won't slow it down. I don't think.
Yeah, closed tomorrow
so
but
that
expanded range candle. So if you look at like the NASDAQ 100, its ATR right now is like 550. Yesterday's candle was $8 and something. So it was about
What's the average true range again?
About $5.50, and it was about $8 and something. So why would you have this huge up candle after you've already run so high in the short term? Well, that usually is sort of a sign of exhaustion, that you can think about the pain trade. Who's on the wrong side of it?
Yeah.
And
Is
pain.
that short covering?
It's short covering. It's a short squeeze. It's because who's doing the buying at the end? It's the shorts that are being squeezed out. It's kind of like you can think of it the other way. When the market's going down and then you start to see big expanded range downside candles, that's the liquidation process. That's people saying, I can't take the pain anymore, just selling, hitting stop losses, whatever. It's the same thing in reverse when you're going up. And specifically in the NASDAQ, I think there's a level of pain for those that are caught on the short side. So those usually, I mean, it's not a perfect signal, but you get kind of that exhaustive signal. If you see that big candle when you're just breaking resistance, it's a very good signal, right? But if you're seeing them when you're already extended away from the moving averages and so on, that's kind of where you're usually at the exhaustion, and you're tired and you level off or you back off.
You know, I'm going to end with this idea. I feel bad for both my sons because they're basketball players, and you know it's happening to both of them right now. But particularly my older kid, is we're going down to play in a big tournament, and you know he got a bunch of letters from some colleges saying, yeah, we'll see, you know, we'll watch him, we'll see. We don't know how good he's going to be. But I always tell him, I says, you know, for about the last 5 years, I've said this next game you're playing, it's the most important game you've ever played. And this week of preparation and practice is the most. And the further you go, the more that becomes true. There's never going to be a time until he's done that isn't the most important step he's about to take. So I've kind of been this broken record as a father saying, you know, in your prep this week, there's never been more at stake, right, in your basketball plan. Well, I feel the same broken record when I say there has never been a more important time to have a financial education. Absolutely the truth.
I agree.
I mean, if you were to look, I wish people could go back and hear that COVID meeting and the comments people were typing in and how hard it is to put that seatbelt on in the middle of the crash. It's not possible. Those that had been with us, that had like, do you really want to be beta weighting on the fly the first time, choosing strikes, choosing technical levels?
If you don't know how to do it, you can't.
And the reason I like the idea of us, like, I don't like to create products that there's no demand for. That's why I say like and subscribe and tell us if this is something you'd like, because here's the thing. In my life, you've got I wasn't investing in, 87? I wasn't investing yet. I was still too young for
Black Friday.
Black Friday.
I think it's Black Tuesday. Black Monday.
Yeah.
It was a weekday.
Whatever
I know that.
It's actually Monday because you went through the
Monday.
weekend. Yeah, it's Black Monday.
And then you know, mutual fund scandals and stuff. Then you had the dot-com bust, which was accelerated by 9/11. I was investing then. Then you have the real big one of subprime. Was investing then. Then you have the biggest one, which was COVID. I was investing in. So in my 30 years of doing this, I had three major three. You've only been through it 3 times. This fourth one is going to be bigger than the other because each one is bigger than the previous. Do you really want to have not practiced? Because there's not a lot of chances to practice this. And so just learning about things like beta weighting, protected puts, even spreads are a nice way to do this.
Well, and there's a lot of protective medicine you can use, you know, things like
but do you want to be learning this on the first
time? No, not at all.
Or do you want to have practiced and gone through scenarios? So I'm just saying, like, I'm either Paul Revere, I'm Chicken Little. I don't think Buffett's Chicken Little. You look at the cash he's put aside to swoop in and get this done.
And I would say, you know, is this worth it? Is it worth it to get this type of education? And for myself, my net worth has been benefited more by the crashes than any other events that have occurred. Like when you look at the opportunity that comes when you know first A, how to protect yourself, and then B, how to capitalize. I mean, it's been the huge factor in how well I've done. And that can be true for anyone. Like, I'm not special in that. It's just I've learned some strategies. I've learned some techniques that we can share with others. But is it worth it? I think it's massively worth it. It can be life-changing. Yeah.
So great discussion. Isn't that weird that the market, we have this big candle and the three of us are like, I don't know. It could go further, but not much more.
Yeah.
Unless it goes a lot more. And then
and
then I've been long the entire time. So, it's because, that's actually the cool thing about it is if it does go higher, because we know
positive by a zillion right now.
Our portfolios are bullish by design, right? Yeah. So you're benefiting from even though I'm doubting how long it's going to go. But we don't have to predict it. We just have to know what to do and know when to do it. Yeah. Boom.
React. Predicting.
Yep.
Great stuff. Hope you enjoyed our conversation. Go to yourinvestingclass.com. Like, subscribe. Is there anything else? Comment and hit the
comment.
What's the
notification bell? Yeah, there's
notification bell.
Yes.
And you're supposed to say smash that subscribe. That's
That's
supposed to get people more excited.
Smash it.
Yeah, I don't know.
Don't just click it. Smash it.
I'm not.
Bang.
I've seen them on YouTube, and they like to say smash that subscribe. So I don't know.
Smash it. But we hope you do benefit, and if anything, you get a greater appreciation for the role financial education plays in your life, especially if you're going to deal with assets and wealth and be able to participate in conversations like this one. So I'm Andy Tanner, your host. This is the Cashflow Academy podcast. This is where we do our best to make investing simple. Thank my guest, Corey. Thank my guest, Noah. We'll see you next time.